Hi everybody, welcome to Christensen Wealth Management. I'm Michael Christensen. Thanks for taking time out of your day to watch this market update and industry sector review for the week ending Friday, January 12th, 2018. Before I jump into the charts of the Dow Jones Industrial Average, the S&P, Nasdaq, and industry sectors, let's start with the quote of the week from Benjamin Disraeli. If you don't know who Benjamin Disraeli was, he was the first Earl of Beaconsfield and was a British statesman of the Conservative Party who twice served as Prime Minister of the United Kingdom. He was born December 1804 and died April 1881. And he once said, "To be conscious that you are ignorant of the facts is a great step to knowledge." Those are wise words from Benjamin Disraeli. All right. Let's take a look at those charts, starting with the Dow Jones. Here we have a chart of the Dow Jones Industrial Average over the last 6 months, starting from July 10th to January 10th, 2018. And as you can see on this chart, which happens to come from investing.com, you will see that we are still in a pretty sustained uptrend, no defined reversal at all. We have a pretty solid top here. We had a minor little dip here today on January 10th. So the price of the Dow Jones Industrial Average, which is this black line, is still above the 5-day moving average in red. And the 5-day average is still above the 20, and the 20 is still above the 50. So we got short-term strength, intermediate-term strength. Nothing currently looks to be problematic with the Dow Jones Industrial Average. It all looks pretty strong. Here is the 6-month chart of the S&P 500, and it pretty much looks the same as the Dow Jones Industrial Average. We had a small downtick today, but overall, we have to wait a little longer to see if we have the rounding top here on the Dow and the S&P 500. But right now, the price in black is still above the 5-day moving average. So short-term strength with the 5 over the 20. Both of those moving averages still pointing up. And the 20-day in blue is still above the 50-day in purple. And they're both still pointing up. So short-term strength and intermediate-term strength for the S&P 500. Here is the chart of the Nasdaq 100. Looks somewhat similar to the Dow Jones and S&P 500. We had a strong uptrend here, really beginning December 29th up to January 8th. The 9th was a sideways move, and January 10th just barely down. The price of the Nasdaq 100 index is still above the 5-day moving average, and the 5-day is still above the 20-day moving average in blue, and the 20 in blue is still above the 50 in purple. So we still have short-term strength and intermediate-term strength for the Nasdaq 100 with just barely a topping pattern here. We need more time to see how that resolves itself. This is a chart of the S&P 500 Telecommunications Services Index over the last 6 months. Very interesting chart. A lot has changed since I talked to you last. Let's see, I talked to you just after the new year, and we were somewhere right about the top here on this telecommunication index. And since the last week, the price of the telecommunication stocks have begun to plunge rapidly. And you can see that we have the price of the telecommunication stocks in black cut right through the 5-day moving average in red, the 20-day moving average in blue, and it's halfway down here to the 50-day moving average. So we have short-term weakness in telecommunications, and that 5-day moving average in red just cut right through the 20-day on January 8th. So lots of caution here to be needed on telecommunications. Here we have a 6-month chart of the S&P 500 Materials Index, mostly chemicals and other hard goods that are used in industrial processes. And we had a bottom, as I mentioned in prior videos, November 15th, nice uptrend, and then we got up here and we topped currently on January 8th had two slight down movements on January 9th and 10th. The price of the index has moved below the 5-day moving average, which is not such a concern at the moment, but we need to keep an eye on this 5-day moving average in red here to see if it starts to top, and we'll have to just kind of see what the next week brings us. But right now we have short-term strength and intermediate-term strength for the materials stocks index. Here's the information technology index, and we had a nice run from December 29th up to January 8th, and then the 9th and the 10th were just slightly down days for technology. And as you can see, the price of the technology index is now touching the 5-day moving average. That really doesn't mean anything other than we'll just see if this is a topping pattern forming. We'll have to wait and see. But right now we have short-term strength and intermediate-term strength on the information technology stock index. Here's the chart for the consumer staples index from this last 6 months, and we had a top that really came into play here about December 15th, and then for about a little over 2-3 weeks here, sideways action in consumer staples, and then it topped out on January 8th, and then the 9th and the 10th were both down days. So we'll see if that is officially a topping pattern, but is that the 5-day moving average in red is still above the 20 in blue, giving it short-term strength, and the blue 20-day is still well above the 50-day moving average, so we still have intermediate-term strength for consumer staples. This chart here of the S&P 500 Industrial Stock Index definitely looks to be a current all-star. We bottomed out most recently on November 15th, and it has not looked back since. Just almost 2 months of just this beautiful straight line move, and we haven't even had a down day in the last week, that is. It's no down days since December 29th. So lots of strength here, and the price in black is still well above the 5-day moving average, and it's pointing steeply upward, giving it nice short-term strength. And the 20-day moving average in blue is still pointing up and pulling away from the 50-day moving average, giving it intermediate-term strength as well for the industrial stock index. Here's the 6-month chart of the S&P 500 Utilities Stock Index, and if you watched my prior video, boy, I was bearish on the utility stocks, and it is not getting any better. I think I talked to you just about, if you watched the video that is, somewhere around here on the January 2nd or so, and it was still pointing pretty strongly downward, and for the last 7 days it has just been very painful to watch the utility stocks going down and down and down. And you can see this 5-day moving average in red pointing steeply to the downside, and even worse is the black line, the price of the index, is pulling away from the 5-day moving average, indicating extreme weakness. And this 20-day moving average in blue is rapidly pulling away from the 50. So there is nothing positive or encouraging about this utility stock index at this time. So we need to keep an eye on this thing. And if I zoom out, you can see where we are compared to historically. Our current price on January 10th, 2018 is the same as it was on February 23rd, 2017. So about almost 11 months ago. But take it back even farther, same as we were September 20th, 2016. Let's see if we go back even farther. Holy cow, look at that. So we go back even farther, and we are currently in utilities the same place we were June 23rd, 2016. So in a year and a half, utilities stock index has not made any progress, and it is steeply going to the downside. So we need to see where we go over the next few weeks here. It may be headed down here to these lows, which was the election. The Trump election, this is the bottom right here, is November 11th, 2016. So we'll have to just wait and see. It might be headed down that way, but only time will tell. And here we have the S&P 500 Consumer Discretionary chart for the last 6 months. And you can see that it's very similar. It's actually better than the Dow Jones Industrials chart, or the S&P 500 Industrials Stock Index. This one bottomed out here on August 18th, 2017, and it has been in a beautiful parabolic rise ever since. And we haven't even really begun to show any sign of weakness. The price of this index is still above the red 5-day moving average, and the 5 is still above the 20, and the 20 is still above the 50, and they're all really pulling away from each other. So short-term strength and intermediate-term strength for consumer discretionary, also sometimes known as consumer cyclicals. Those are things we don't necessarily need to buy. We choose to buy them, whether they're a service or a product. And that is opposite from consumer staples, which are typically things that we need. Here's the 6-month chart of the Dow Jones Financials Index. I found that the S&P 500 Financial Stock Index wasn't being updated fast enough. It was sometimes 1 to 2 days behind. So I've switched over here to the Dow Jones Financial Stock Index. And you can see we've had a few, we had a little uptrend here in July, then a sell-off in August or so, and then a nice uptrend. We went sideways here for most of December, and then starting on January 4th, the price of the financials index here broke above the high. Excuse me here, let me make that go away. There we go. And we broke above the high of December 18th and December 12th right there. And then we've been in a nice uptrend here for the last several days. So right now, financials are powering up to the upside. The 5-day average is pulling up and away from the 20, short-term strength, and the 20 is slightly pulling away from the 50, giving intermediate-term strength. But everything is currently, for the week, looking pretty good for financials on this Dow Jones Financials Index. Here's the last 6 months of the S&P 500 Energy Stock Index, and again, you can see we had a recent bottom about November 27th, and then it just took off, and oil prices and energy stocks and oil stocks just been climbing higher and higher and higher. This chart actually is not updated for some reason. There's 2 days missing from it, but what I want you to know is that it's pretty much gone sideways on January 9th and 10th, so not a lot of change that's missing from it. And the price is still above the 5-day moving average, and the 5-day is still pulling up and away from the 20, showing very strong strength in the short term, and this 20-day moving average in blue pulling away from the 50, showing very significant intermediate term strength as well for the energy stock index. Here's the 6-month chart of the Dow Jones Healthcare Stock Index, and we had a recent bottom there on November 15th, and it's been climbing nicely up until December 29th, and then after New Year's, boom, we have this nice pop up here to a top on January 9th, and the 10th was just a very slight downtick, and we broke above this October 20th high, which also coincides with December 13th and December 15th. So we broke above that on January 2nd. So we came into the new year, broke above that resistance, and boom, up we go. So we'll have to see where we go with the healthcare stock index in the next week. And our last chart is of the Dow Jones Real Estate Stock Index. These are companies that own portfolios of commercial property of some kind. And very similar to the utility chart, real estate is going down fast and showing tremendous weakness. And the reason that utilities are going down fast and real estate is going down fast is because U.S. interest rates on 10-year and 30-year Treasury bonds are going higher. So the interest rates are going up, which is not something that utilities and real estate like. So the higher interest rates go, the lower typically real estate and utilities go. So right now, as you can see, we had a top on this utility index on November 13th. Strong sell-off, rebound, which peaked on December 18th. And ever since then, it has been a rapid deceleration to the downside here. The price in black is rapidly pulling away from the 5-day moving average in red, and the 5-day is rapidly pulling away from the 20-day moving average in blue, which is also pulling away from the 50. So we have very substantial weakness in the short term and intermediate term on the Dow Jones Real Estate Stock Index. And if I zoom out a little bit here, put this in context, let's see where that takes us back to. So currently, we take a look at where we are, and most recently takes us back to about July of last year. And we go back even farther. I mean, it really has been a very choppy move ever since May of 2016. And also right here, October 2016. So been a long 12 months for real estate here in this chart. We'll have to just wait and see. But if this thing doesn't slow down, we might go all the way back down to this low here of November 10th. Thanks again for taking time to watch this. I hope the charts were useful in giving you a sense of the general direction of the U.S. stock market and industry sectors. When I come back in 7 days, we'll see where we are. But right now, the market's really straining to get higher. But everything is still pretty bullish in the Dow, S&P, and Nasdaq. But we have to remain vigilant. Keep an eye on that to see if there's any reversal coming our way. But in the meantime, before you go, please take a moment to subscribe to this YouTube channel and click the little bell so that you can be notified when additional videos are made available. And then throughout the week, I would like to communicate with you through Facebook, LinkedIn, or Twitter. So do me a favor and look up Christensen Wealth Management and like or follow those social media sites so that I can post charts, share research, and other thoughts with you between each of these videos. All right, I'll let you go. Have a great day, and I look forward to talking to you soon. Bye-bye.